Hey YouTube, I just wanted to get out today and do a quick video for you on some interesting content that I found would be very applicable to just about everybody. I don't want to go into too many details, but I think it's important to understand these concepts as most people will be dealing with the PPP forgiveness, the Paycheck Protection Program, SBA loans that were issued to help stimulate businesses back when the pandemic just broke. Now recall that the PPP protection, Paycheck Protection Program was basically issued for you to cover your payroll costs and some basic operating costs. Some were receiving the PPP funding from the SBA back in 2020. Others might have received it in 2020 and then another round in 2021. So it's a mishmash of things. Some people might not even have received their PPP. They felt they weren't needing it, or some people didn't qualify for the second round but qualified for the first. So whichever category you're in, I'm going to go into this into a little bit detail as to the forgiveness process and how it's reported on your business return. It's important for you to understand these concepts so that you're on the lookout for the disclosures and statements that should be attached to your business return. And you should basically be aware of this and give your accountants the information that they need. And if they're not already asking for it, you should definitely be aware of it. So what the PPP protection program was basically a loan. All right. And if you didn't use the loan proceeds properly, then you technically would have to give it back. And there was some interest, some nominal interest that you would have to pay on it and so on. So in general terms, how is the accounting actually being performed on the bookkeeping side of things? So when the loan would come in and it was being funded through the SBA, through your lenders, basically that would have been recorded as a liability on the accounting side, and it would be presented on the balance sheet. Remember, we have two statements that are that really comprise the financials for any business. We have the balance sheet, and then we have the profit and loss. And most clients or taxpayers focus on the profit and loss, but there's this other very important, crucial financial statement called the balance sheet that works hand in hand with the profit and loss. You can't really have one without the other because they're intertwined. All right. And just as a recap, yeah, the P&L, the profit and loss statement is just your income less your expenses equals your profit or loss. And the balance sheet is, continuing balances that go on and on and on, kind of like your bank balance. Until you zero it out, it'll always be there, either as a positive or as a negative. And your balance sheet consists of your classic accounting equation: assets equals liabilities plus owner's equity, or you can rearrange it: assets minus liabilities equals owner's equity. Don't matter, it's the same thing. But in short, you can think of it as your net worth statement, or what the business is really worth. And yes, people can have personal financial statements that, if you've ever heard somebody coin the phrase, that very successful person has a net worth of such and such, they're actually referring to the balance sheet. They're looking at their assets less their liabilities and what they're actually worth. So that's very much the same for business. So anyway, when a loan is forgiven in general, for tax purposes, that creates income. All right. And so there's really no other place you can go for accounting. So if you've ever taken an accounting course, that's basically what happens to forgiven debt. Now, under certain exemptions, that debt becomes non-taxable. So in certain situations, if you had bankruptcy perhaps and your credit cards were forgiven, or if you were insolvent as an individual, then you can actually not have to pay taxes on this forgiven income loan, which becomes income, right? So very much like with the personal side of things, where somebody's insolvent or there's a bankruptcy, on the business side of things, this PPP forgiveness is actually going to be, and when they first came out, they weren't sure what they were going to do with it, because there was all this other stuff that was coming into play, the retention, the employee retention credit, and then there was, at first they were going to have you disallow any expenses that you use the PPP for. So they weren't sure what they were going to do with it. But eventually they just came out and said, hey, you know what? Don't worry about the expenses. Don't worry about any of that stuff. We're just going to forgive this loan and call it a day. You can still use the expenses against it. Because don't forget, like if you didn't record that money coming in from the SBA as income, then you should probably not reflect the expenses that you spent it on as an expense, because then it kind of would double dip up, and it would create this accounting issue for most for people, right? So for their business, so that would be considered double dipping, because you didn't report it as income, but you're still spending the money to expense. So they said, all right, don't worry, keep the expense part of it. So if you spent the money on payroll, you can keep the money as a payroll expense. And don't worry about the loan, we're just going to forgive it. So what ends up happening is the accountants, as of the date of forgiveness, will reverse the money via a journal entry, and they'll wipe out the debt, but then they'll reflect it as income on the financial statements, on the P&L, on the profit and loss. So on the books, you're going to have, let's say you borrowed $15,000. Right, so on your books, you're going to have $15,000 of other income, and it's going to be labeled something like SBA forgiveness or whatever your accountant decides to call the account. Right now, there are, like I said, under certain exceptions of the code, certain canceled debt would not be considered income for tax purposes. So on your tax return, it's going to actually be zero income. Right, because like I said, this falls under a certain revenue provocation, right? And so this kind of brings home this point of book to tax differences. So on your books, you're always going to have a higher profit, a higher retained earnings, a higher net worth, equity, whatever you want to call it. But on your taxes, when you're going to be looking at your tax returns, because the tax returns also disclose the financial statements, you're going to have always a lower equity or worth or what have you, because you know, for tax purposes, you basically didn't have any income. All right, so that's going to create a permanent, what we call permanent book to tax difference. There's another concept that's called temporary book to tax differences. That's when, for example, depreciation is calculated one way on under generally accepted accounting principles, but it's calculated differently under tax law. And at the end, they're still going to be written off. The assets are still going to be written off. It's just a matter of timing. And in one point in time, you're going to write them off in its entirety, whether one method book is more accelerated and tax is slower, or vice versa. They're temporary differences, and at some point they're going to equate, right? And there's also differences between tax laws. So like federal tax has different laws than state tax. So whereas you can depreciate something in full on a federal level, some states might say all you can do is $25,000. But in the end, they're both going to equate at some point, right? Because you're going to write it off one way or another. So those are that's the basic premise here. Book the tax differences. That's what I'm really making this video about. And then I also wanted to talk about the forgiveness process. So you're going to have to disclose this, or your accountant's going to disclose it on the Schedule M1 and the Schedule M. Let me just double check 3, I believe. Let me just double check that. Yeah, so M1 and M2 is going to be M1 on your, if you're working with an 1120S, which most people are. If you're working on a partnership, there'll be a similar form, and one is just basically a reconciliation of books to return. So anyway, maybe you can just look out for the reconciliation of basically books to return. And that's where we have those permanent or temporary differences reflected, so that the tax authorities can see that what you're doing between the books and the tax law. And so one's going to basically reflect that there was this difference, and why do we have this difference is because we have something that's non-taxable for tax purposes, but it's still being reported as income internally. All right, and if you're dealing with an S-Corp situation, so you'll also have this other M2 schedule, which is analysis of accumulated adjustment accounts. And then it's just another way of disclosing this. That's where the difference really comes in for this other theory. I don't want to call it a theory. It's really more of a concept about accumulated adjustment account, and it's just it's a different way of calculating your equity than your traditional accounting would. So the IRS has this other method of reporting and keeping tab of what's actually considered, stockholder basis, if you will, if you want to get more technical about it. So I don't want to dive into that because that's really a whole other discussion and really deals with more advanced taxation that I don't think you want to be bothered with. So just know that, if you're working with an S Corp, it has to be disclosed on 2 schedules, and then obviously you have to report your entity name. There has to be a special statement with your tax ID reflected on this statement, and a few other required wording that would be automatically generated by your software, and that's going to deal with under which section of the code, and I'll highlight it here. You're getting rid of this loan forgiveness into income, right? So most will fall into the 3. It's under Revenue Provocation 2021-48, and it's going to ask for a section of the code. Most will probably fall into this part where it's been already forgiven, and that's it. It's that straightforward. So anyway, if you guys have any questions, if you like the videos that we're putting out there, give us a thumbs up or leave us a comment. We're always here trying to bring you the latest developments, so that way you can stay informed and have time to act accordingly and avoid issues with the tax authorities. All right, that's Freyman CPA. Remember, our motto here is what's our motto, Angie?
All day, every day.
Yeah, we forgot our own motto.
We care about our clients.
We care about our clients, and we want to make sure that they succeed at everything they do. Remember, your success here at Freyman CPA means our success. Have a great one, YouTube. Take care.